that kind of was at the clicking the got it recording session button. I got involved in anything that was creative and technology based. Was always very interesting to me. As a kid, I was really interested in that kind of thing. And then I was kind of ho-humming around in kind of the early 2010 and 11 era, tried to build a mobile tech company with a few friends. That didn't really go anywhere. And then in 2012, I was helping a friend go buy a used iPad off Craigslist. And this person was selling everything that they owned for this thing called Bitcoin. And he was trying to sell me a BMW Z3 or something. And I said, I have no money. I'm not buying that off you. But why are you selling it? He said, well, I just want to buy Bitcoin. And I had never heard of Bitcoin before, and neither had my friend. And we left that guy's house thinking he was absolutely insane. I can't underline that enough. I mean, this is really before Bitcoin or cryptocurrency was in the zeitgeist of pop culture. And I was curious enough to go on Reddit. I live on the internet then. I still just live on the internet. And so I looked up on Reddit, what is this Bitcoin thing? I read the white paper and thought it was interesting. But like a lot of people, especially in those early days who hear of cryptocurrency, they think it's an interesting idea, but it can't possibly work. So they kind of ignore it and push it to the side. They don't spend meaningful time on it or effort. And in early 2013, it continues to make its way onto the front page of Reddit. And at that point, I decided to do a deeper dive into the community and to see what was happening. Why were people so passionate about this thing called Bitcoin? And there seemed to be this really intellectual debate happening between people debating monetary policy, distributed computing science. Could you have a native token that would act as money for the internet? And they were very passionate. There were some fantastic memes going around, and I decided I need to spend some more time, looking into this. And I became obsessive with it, and really dove into Bitcoin in 2013, and then became part of a Toronto meetup group, which at that point was, 10 people in the city talking about how they could match a Litecoin address to a Bitcoin address, the last number of digits. And I pushed up my glasses and went, that is so cool. But my family thought it was absolutely insane. They didn't want to hear about this. They said, this sounds really stupid. I don't know what you're buying. I don't know what you're paying for. And so 2013 is really when I fall into Bitcoin. And then around this time, Vitalik Buterin, who's a teenager, is part of the Toronto scene as well, starts saying, well, there's all of these clones of Bitcoin, right? Bitcoin is open source code. Anyone can go on GitHub, they can copy paste it, redeploy it, change around the recipe, and call it Litecoin or Purecoin. We've all heard of Dogecoin, but they weren't making 0-to-1 improvements to the protocol. And 0-to-1, if you haven't read Peter Thiel's book, well, literally called 0-to-1, I highly recommend everyone open another tab after this, because pay attention to this for now, but open another tab later, go on Amazon, go buy yourself 0-to-1. It is a fantastic read. You'll read it in 2 days, and it helps frame the world, I think, a lot in terms of investment, in terms of business opportunity, and where you guys want to align yourselves in your career. And what 0-to-1, very high level is about is, if you want to displace a technology, you need to be an order of magnitude better or different than your competition. You can't just be an optimization of code or an optimization of something that exists. And Bitcoin is a 0-to-1. Bitcoin is a 0-to-1 technology. It invents a category. There was no such thing as digital assets or cryptocurrencies really before that. There are a few kind of attempts, but not in the way that Bitcoin was designed. And when you think about Litecoin and Dogecoin and Purecoin, Feathercoin, none of those were 0-to-1s. Those are 9-to-10s. Those are optimizations on the Bitcoin code. Faster block times, faster transaction speed, different monetary policy, but they're not 0-to-1s. When the idea of Ethereum came about, it very clearly was a 0-to-1. It was something entirely different. It was this notion that the base layer of Bitcoin, by design, was not flexible enough or programmable enough to do anything that was overly expressive. Bitcoin is basically like a fantastic calculator. You can send and receive, but that's pretty much all you can do. You can't call on the blockchain to do anything beyond that. And Ethereum envisioned a different world, that you needed to create this, operating system to allow people to build all sorts of applications. But it wasn't clear at that point in time what those applications would be. But reading that white paper and hearing what the potential for Ethereum was extremely interesting and very inspiring. This idea that all assets globally, financial, physical assets, phones, cars, everything could get tokenized and represented on chain in some type of way. And it could be traded, it could be borrowed against, and that you could have this very mesh network-like structure to all assets. And that another thing that was kind of interesting to think about was that everything in the real world kind of exists in these very like binary states. Your bank account sits in this either open or closed position. You have a checking account, but it maybe doesn't plug into your Bank of America equities or securities account. You have to like ask permission to open the state of that account. And Ethereum by default is in a different state, which is that every account is open, in that your Ethereum account can interact with a lending protocol, and the lending protocol can be plugged into by someone building a different type of lending protocol or a different type of stable coin that could just immediately plug into that code, but without having to gatekeep or without having to ask permission. So it didn't really have these like binary open closed states. It was just open. And that seemed, I know this is very meta, by the way, but that seemed really, really fascinating as an idea of what the potential of this could be. And so I fell down the rabbit hole on Ethereum. And in 2017, there was a friend of mine who was building a lending, it was a lending piece of software to facilitate margin. People were trying to margin trade Bitcoin and Ether, and you couldn't put out a market rate on this specific exchange. And so he built software to help facilitate that activity. And I was helping him with that. That business got sold. And then around this time, this is now 2017, so you're in kind of the ICO boom. The ICO boom is people issuing tokens on Ethereum, trying to build other types of applications, other blockchains. The price is now going for Bitcoin from 3,000 up to 20,000. Ethereum is going from probably about 100 up to over 1,000 before the 2018 bear market crash. And this was really interesting because now you have a lot of retail investors showing up. They're getting really excited. It seems like the space has a lot of momentum behind it. And at that point in time, there were no access points in the capital markets. Meaning if you wanted to buy some way Ethereum through your traditional brokerage account, there wasn't a ETF, there wasn't a closed fund, unless you were comfortable signing up on some centralized exchange, like a Coinbase, you basically couldn't participate in the asset class. And the infrastructure was very nascent at that point as well. There weren't audit firms necessarily comfortable with auditing the asset class. You didn't have institution grade custody. The regulators weren't ready to greenlight any structured product. And so up in Canada, a very well-known asset manager said, can we put together a public company that isn't going to be an ETF, but that can focus a group of people around a table who are a blend of crypto natives, venture capitalists, and people from traditional finance, and create a company called Ether Capital and say, we can be an access point in the public markets so that investors who want exposure to this space and all this insanity, the ICO boom, this group can navigate and focus that story and say, here's the signal amongst the noise. I was not involved in the going public transaction of Ether Capital. At the time, I kind of quit work, was doing nothing, just enjoying playing around in crypto and dating a pretty mean lawyer, which didn't work out so well. And I was approached a few months after the company went public, where the CEO of this entity was not crypto native. He wasn't in the crypto community. He didn't really have a view on where things were going. And it became clear to the chairman, even though he wasn't a crypto native, but he put this company together, that he needed someone who could articulate what was happening in the space and why it was valuable and what the opportunities were long-term. So I was asked to join Ether Capital in late mid 2018 in July, and had never been a CEO of a public company before. So that was kind of an interesting little jump. But it's kind of proof that, you know, you're never really ready for any of these starting business opportunities or being a CEO role, and you're going to learn on the job, and you either have the right stuff and can swim the deep end, or it doesn't work out and you move on and you find something else to do. So kind of the lesson there is, you know, don't be afraid to take a leap. If it doesn't work, you'll do something else. Life's going to be fine. You know, as long as you have your health, you're good to go. Or Joe's Pizza. Joe's is pretty good. So anyway, I joined Ether Capital mid 2018. And this is at the beginning of a pretty brutal bear market. And so we were a small Canadian company, 50 million in assets, and it turned into a 2.5-year long bear market where the price of Ether slumped to as low as probably $80 during this period. Our asset base shrunk to sub $10 million. We made a few investments along the way, one into a company called Wyre that I think is on the question list here. We bought some Maker. We thought that was going to be very interesting. And it got so brutal that there's a lot of complexities around being a public company. You have fixed costs in terms of what your legal fees are, what your audit is going to look like. You need some full-time management. And so you have what's referred to as, you know, a burn or a management expense ratio, even though we're not technically a fund. And you basically can't be TLDR, you can't be a public company with sub $10 million of assets. The cost of running this thing just doesn't make sense. But we always believed that our bet on Ethereum was right. We just didn't know what the timing was. And throughout this bear market, we were told that we would get delisted. You know, the exchange is literally going to delist your stock. You have a board who, some are crypto natives and believe in Ethereum and crypto, some who are saying, this is too crazy, this was the wrong bet, we don't blame you personally, but we should wrap this thing maybe in a bow and, you know, shake hands and say, time to go home. I begged and pleaded not to wrap this thing up. At the start of 2020, you know, COVID-19 comes about as a narrative. At that year also, the Bitcoin block reward was going to be cut in half, which is part of the monetary policy in Bitcoin. Ethereum was finally, after a million years, going to turn on proof of stake, phase 0. And I said, this is not the year to wrap this thing up. There's going to be a lot of things working in our favor in terms of escape valves in institutions, retail investors, a different group of people wanting to invest in crypto as they're concerned about inflation because of COVID-19, and bad central banking monetary policy, Bitcoin halving, proof of stake. Please get us to December and let's see what happens. And if in December I'm wrong, I'll resign. You can fire me. You know, we'll decide then. And luckily, we had 3 ducks in a row work out well. There was a lot of concern around inflation. The Bitcoin halving happened. Proof of stake got turned on December 1 of 2020. And the price of these assets had a very new wind at their sails. Price goes up. In crypto, we would say number go up. And now there's this renewed interest in the space. I was working at the time also with the chairman to try and see if we could get a true Bitcoin ETF approved by the regulators in Canada, not what you guys have in the US, which is a futures-based ETF. We actually got a spot ETF approved. And so we were the first in the world to launch that. Now Ether Capital is roughly, 180 or 200 million in assets. Very different company, expanding our team rapidly as we are now looking to build out different businesses and core infrastructure in the space. I also sit on various regulatory committees, Canadian regulators, some in the US. I helped form something called the Web3 Council of Canada, or the Canadian Web3 Council. I don't know what that thing's called. People are arguing about it in Slack, and whichever they choose will be great. So very passionate about government policy and regulation for the space to ensure that opportunities to remain competitive with a very international asset class remain. So that's a very long answer to the history of how I came into the space, what I do in the space, and how I'm viewing things. And the last thing I would say is, when people say to me, why are you so focused on Ethereum? What do you think about, Cardano or Polkadot, Avalanche, any of these things? I referenced before 0 to 1 in Peter Thiel, and that is a little bit because I think about it fairly often of, are these competitor smart contract platforms 0 to 1s, or are they 9 to 10s? Are they saying the cost is a little bit cheaper, the transaction speed is a little bit faster? Is that enough to displace the Ethereum community? My answer is no. It's an entire tech stack. It's having the CryptoPunks as like a historic NFT that exists in a certain environment. Do you have the capital formation on these other chains? Do you have the intellectual capital flocking there? Is there infrastructure around wallets and fractionalized NFTs and OpenSea support, which is a marketplace for NFTs? So when people say, that something else is cheap and fast, I'm trying to point out it's more than just cheap and fast. You need infrastructure surrounding those protocols. It doesn't mean that any of these other blockchains can't be successful or do well, or that I think that the price will go to 0. That's not my statement. I'm just saying that I think that there's a 0 to 1 that exists in Ethereum that is very hard to displace at this point in time. And for now, that's where my efforts and sights are focused. I will turn it over to you for question number 2.
Yeah, thank you so much. What an amazing and stunning story so far. I myself am quite inspired by you, Brian. Yeah, I'm pretty sure that you sparked a kind of crypto spirit among us. But yeah, second question was about the Ether Capital. You already mentioned a lot, and you gave us a little bit flavor about the Ether Capital. But do you want to just mention about the team, kind of functions, or do you want to add more details in it, or we can just directly dive into a couple of questions? Yeah.
We can move kind of past it, but high level, Ether Capital has a very specific structure to it. It's not an ETF. It's not a closed fund. It was set up as a corporation because we always wanted to be able to do more than just hold Ether in the capital markets. So things like staking, you're not going to see in any ETF. I mean, in the US, there's no Ether ETF, even though it would be futures based initially. You would be limited in the activities you could achieve in those structures for a whole host of reasons that I won't get into because it's fairly in the weeds. But a corporate structure gives you a lot that you're able to do. So for us, it means being able to stake. It means being able to use the revenue from staking to build out infrastructure and operating businesses. I think a fortunate opportunity for us and everyone basically on this call, if they're looking to work in the crypto space, is that the design landscape, the canvas is so broad of what needs to get built here that any business that you go into or want to create, we have not seen, in my view, really the global leader for the next 20 years. I think that there's a few that there's definitely some winners. FTX and Coinbase, I think, have done very well. They're excellent products. I think custody can still be challenged or done better. I think we've not seen a world leader in staking providers. No one has solved yet insurance products, whether it's an on-chain insurance product or something that's off-chain, servicing the crypto industry. News sources. I just think all of this stuff is such early days that there's so much opportunity here, and that's really exciting. So for Ether Capital, we've been aggressively, now that we have hundreds of millions of dollars under management and revenue coming in from staking, we're the first in the world to stake Ether inside of a public structure. We can use those revenues to build out this infrastructure that we think has not been created yet at world-class, what financial institutions would expect. If any of you hold any crypto and have ever tried to report tax, it is abhorrent. It's embarrassing. That software is unusable and almost completely wrong in what it'll spit out for you. So there's a lot of opportunity here, and it's really exciting. We're still a very small team. We have, some key people: CTO, CFO, COO, me, a board. That's kind of what Ether Capital is up to and where we see the opportunities in the next few years, which is anything we want to do.
Yeah, awesome. Yeah, quite exciting for sure. So let me just ask a couple of questions to you, then I'll leave the stage to the audience to direct their questions to you. I'm pretty sure that there will be lots of people excited about their questions. So my first question about the Wyre, you mentioned about it, but there's a recent news about Ether Capital, and Wyre is acquired by Bolt, which is a very, very important development in the Web3 ecosystem. So we would like to hear about your thoughts. I mean, what do you think about it? So the folks may not know about the Wyre, by the way. It's better
Sure.
for us to learn about you. But how do you think that this new development will affect the markets and overall the Web3?
So we made an investment into this company called Wyre, or it could be technically SendWire. I'm not sure, but Wyre was this bet on support developers. And by the way, a lot of my thesis in the entire space back from when I first entered in 2013 till now is follow the developers. If you want to know where to invest, just look at what the developers are interested in, look at what they're playing with, look at what they're building, invest in and around what excites developers, follow them as the source for opportunity. And anyone who wanted to build an application on Ethereum or any smart contract platform didn't have an easy way to on-ramp dollars to crypto to let someone use their app. So if you believed that there was going to be betting applications and decentralized trading applications, it would require people to go to Coinbase, connect their debit card, their bank account, go buy some crypto, move it off into a MetaMask wallet, which is a browser extension-based wallet, the biggest one on Ethereum, and then they could interact with the application. And to me, that just seemed completely clunky, and there needed to be a better solution, and Wyre was tackling this problem. Wyre wanted to say, here's 10 or 11 or 15 lines of code that any developer can drop on their website, and it automatically will pop up a MetaMask wallet or let you immediately just get some dollars into crypto without any of the other friction. And so it's kind of it's an exchange, but it doesn't look like Coinbase. It's not a retail facing sign up on that platform and do all your trading type of exchange. It's a dollars direct into an application in crypto type of exchange. And so that plugs into this thesis of, support the developers and give them the tools that they need to build out their application. Sorry, I got distracted. My director of communications is telling me I think I got really into my PowerPoint presentation and forgot to join. That's okay. I'm doing great. And so that's why we invested into Wyre. And then over time, they became, when you used MetaMask and you hit the buy button, you wanted to buy, $300 of ETH because you were going to buy some NFT, Wyre would be the thing that would pop up that would power that transaction. And so this was a very meaningful piece of infrastructure to the space. Our thesis did play out over time. And Wyre is currently being acquired by a company called Bolt. Bolt is essentially a competitor to Stripe. PayPal wants to play in this arena. Everyone gets that there needs to be a better seamless experience for online shopping, and whether it's in fiat, dollars, or it's going to be in crypto, making that transaction seamless, quick, and easy is very important. And Bolt, who didn't have a crypto strategy, is looking at a company like Wyre and saying, here's a team, here's expertise, here's infrastructure, here's a number of people in a compliance department with an understanding of various regulations. And in the US, the regulatory environment is very fragmented, what's required state by state. And so Bolt has acquired, or is in the process of acquiring, Wyre. It was front of the Wall Street Journal, who broke the story, I don't know, 2 weeks ago. And so that's very exciting for us to see a portfolio company get acquired and put together those two teams and resources to build a better checkout experience, whether it's people wanting to pay with a stable coin and crypto, or it's people just using Bolt's product, checking out using a Visa card or whatever it's going to be. It's a real marrying of those two ideals and two business lines that have a lot of synergy that can piggyback off one another. So it's a great outcome for Ether Capital. It's obviously great for our shareholders. We haven't disclosed yet financially what it'll mean for our shareholders. There's still a lot of nuts and bolts that have to be done with the deal before we can disclose that and it takes place. But that's the high level what Bolt and Wyre is and what that transaction represents and the opportunity going forward for both companies coming together.
Awesome. Very, very, it looks super lucrative to the market. So it does, I guess. Quite excited for the next news. So my next question is about the your opinion about the current Web3 trends. So what do you think, what are the current Web3 trends that you are most intrigued by, and how does Ether Capital position itself? What kind of, yeah.
So I'm actually I'm quite bearish a little bit on some of the things that became very buzzwordy in I guess 2021. So NFTs and metaverse, I think have a lot of promise and opportunity long term. But I think that we're in kind of this 2017 ICO era where too much money flew into these new assets without really vetting what would have long term staying power. So I think most of the NFTs that were created and that are still being created are probably going to be worth zero. There's not going to be any type of secondary market demand for them. I'd caution people to not throw all their money into some new drop that they saw on Discord that got pumped up on whatever on Twitter. But I think that NFTs as a way to form capital and community are a really interesting idea. I think that it's interesting. You can see people rally around an aesthetic or a community set of ideals that you couldn't necessarily do as easily around these crypto tokens that had no outward-facing identity that was as easy to grasp. So one nice thing about NFTs has been that it's pulled in a group of users to the space who don't necessarily care about Ethereum as a global settlement layer or Bitcoin as this kind of hedge against inflation monetary asset, but they are drawn to this idea of a community will form around this limited number of whatever NFT profile pictures, and maybe there's brands that will emerge that can build products based on those NFTs. But I think we're really scratching the surface, and now you're seeing a retraction in the interest in that area. We're seeing that a lot of the hype is going to get washed away. And I think that this is very much the same for the metaverse, which you could also kind of argue that we already had the metaverse. I mean, Twitter is a form of the metaverse. I can be a pineapple on Twitter. I could also be Brian Mosoff on Twitter. I can have those two identities at the same time. I'd love to be a pineapple on Twitter. Pineapple is an excellent fruit. So is mango. Strawberries are overrated. Sorry if I offended anyone here. And so we kind of already have early versions of the metaverse. On Reddit, you can have a different identity. I think that not being forced into your real life identity is really important for humanity and free speech, that people anywhere in the world should have the right to interact with other individuals and not have everything that they say, think, search, wonder, be tied back to their in real life identity, because that data can be mined in a potentially very dangerous way. That you're making decisions. If you want to push real life identity into any of these products, you're making a decision that's not just about your government of today, it's all the governments that are going to come next. And we can see that society is now really challenging these how authoritarian or how much surveillance is appropriate to balance out with freedom. And it's a really interesting conversation that I think crypto inserts itself into the middle of. So I don't really know what the metaverse that turned buzzwordy in 2021 is going to be. I hope that whatever Facebook thinks the metaverse is not what we all end up using. I don't know that Decentraland and Sand are the right implementations, but I think we're in that 2017 era, and crypto really hit its stride in kind of second half of 2020 and 2021. So it took 3 or 4 years to wash away the hype, figure out where's the correct tooling, what is the right implementation, before the real use cases can emerge, before the correct versions, whether it's those same companies or groups or token holders that create it, or it's a new group of emergence. I don't know, but that's kind of how I'm thinking about Web3. Ether Capital's view of all of this is all of this activity, NFTs, DeFi, metaverse, it all is going to plug into some global settlement layer. And when I think about Bitcoin versus Ethereum, I think of Bitcoin as a global clearinghouse that settles one asset, which is Bitcoin. And I think of Ethereum as a global clearinghouse that can settle any asset, whether it's crypto native assets or it's tokenized real world, meat space atoms. That's how I view Ethereum. And so I think that all of this activity, the registration of your NFT to your address, or to some type of interaction that you're going to want to have, or the payment because you bought some clothes on bananarepublic.metaverse, .meta, I don't know what the domain extension is. All of that is going to have to settle to some layer or use something as the pipes. And to me, all of this just points back towards why Ether is such a valuable asset. That the way to play that is just to say, I don't want to bet on a specific vertical. I don't want to bet on Decentraland or Sand or this NFT or that DeFi protocol or that type of new token. Just own Ether. It's all going to have to get cleared and secured by one of these smart contract platforms. And maybe it's not Ethereum. Maybe it's one of the competitors to it. I'm not here to really be an ETH maxi. I'm here to just kind of point my view of, I think that activity settling to something at that base layer is the best way to invest or play this, because there's a high chance that the metaverse fails. There's a high chance that the NFT that you chose fails. There's a low chance that in 5 or 10 years, Ethereum has failed. And so maybe there's more upside, there's more asymmetry in the specific NFT project, but that asymmetry, people have to realize, also works to the downside, as well, that you picked the wrong Bored Ape Yacht Club derivative, boom, and it blows up in some, not great way. Ethereum will be fine. And so when people say to me, have I already missed the boat on Ethereum, or what do you think? I'm looking at them like they're crazy, in that there's still, a 10 to 50x or more sitting in these assets, in these base layer assets, that when you're speculating on competitors to it, or you're speculating on other verticals, it's almost like you're saying a 10 to 50x is not good enough for me in my investment portfolio. I need 50x wasn't good enough. I needed to chase the 100 to 200x, but risk a 100% downside, which to me just seems completely insane. As someone who's spent the last 10 years highly speculating in a very volatile asset class, and looking or experiencing a lot of black swan events. Black swan events being centralized exchanges getting hacked before people thought that could be a thing. The DAO hack, even though it's not really a hack, but the DAO incident in early Ethereum, I mean, that was a very black swan event that no one saw coming. I read the code, a friend read the code, Vitalik read the code. Everyone thought it was fine. Well, guess what? It wasn't. So that's kind of where I'm taking a step back and just looking at these protocols as those base layers have already kind of won and are going to continue to do so well. They're a great way to just continue playing the space. So Ether Capital is going to focus on those base layers.
Yeah, awesome. I mean, we are, to be honest, we are stuffed with lots of deep insights. So I'm feeling super more bullish right now about your the forecasts. Yeah. So let me ask one more question, and just we'll allow other participants to ask their questions. So we are all curious about this ETH 2.0. So it's coming, we know that, but we don't know when it's going to be finalized. But we would like to get your opinions. Do you have a kind of certain date for ETH 2.0 to be up and running, and how will affect both Ether Capital and the overall ecosystem? What do you think about it? And what is the most overlooked impact of ETH 2.0 so far?
So, for everyone who's not familiar, ETH2 is basically the transition from proof of work into proof of stake. We're going to get rid of the commodity being put at stake, being external to the network, which in proof of work mining is electricity and computing hardware. In ETH2, the commodity is internal to the network. It's the native token Ether that's being put up to validate these networks. I think that it's a really important transition, because if you think about the ethos and the spirit of crypto, how contrasty am I? I'm going to slide a tiny bit to see if we get better light. Let's see what this does.
Yes,
Yeah,
yes,
yeah,
definitely
marginally better. Um,
better.
you know, when I think about the spirit of crypto, it initially started in Bitcoin that people on their home computers can participate in the validation of these networks, and over time it became centralized and put into the hands of people who had access to cheap electricity and computing chips. And that's, you know, fairly concentrated in parts of the world where they have that access to both of those things. I'm currently in Toronto. I pay 12.5 cents a kilowatt hour. There's no way that I'm going to proof of work mine here. And all that the miners are doing really is arbing the cost of electricity. They don't necessarily have an interest in the network, right? They're performing a very picks and shovels like service for the network, but they're not necessarily aligned in incentives with the token holders. What I like about something like staking is it goes closer back to the ethos of validation network, validating the network where the token is now native to the protocol and the actual users, the actual token holders, have an aligned incentive with validation of that network. And that you've abstracted away the electricity and the computing hardware where I can be paying 12.5 cents a kilowatt hour and still stake and validate transactions. So I think that that's very important. And also leads us closer to staking. ETH2 is technically already live. It rolls out in different phases. Phase 0 is what went live in December of 2020, where you actually can stake your Ether. You can move your asset onto the new network and start generating a yield. But in the current form of ETH2, in phase 0, Ethereum 2.0, there's no liquidity and it's not a two-way bridge. So you can't decide tomorrow, ETH goes up to 10,000 bucks. Oh my God, mom, I'm going to buy you a nice birthday gift. I'm going to sell that ETH, get my however much money it's worth, and then, you know, buy your mom her nice bouquet of flowers or tickets to Billy Joel at Madison Square Gardens, which I did. It's a one-way bridge with no liquidity. And that has meant a lot of users sitting on the sidelines saying, I don't know how long it's going to take for phase 1 to roll out, and I'm not going to participate just yet. When phase 1 goes live, which should happen at some point this year, there is no date, by the way. Anyone who tells you that they know when ETH2 phase 1 goes live, just ignore it. It'll happen when it happens. And it's important to keep in mind that this is a $400 billion protocol. All of the really exciting DeFi NFTs, metaverse, trading, stablecoins, that is all happening on this $400 billion network. And there's no room for error here. So merging those two networks, ETH1 and ETH2, prematurely and having the risk of it blowing up on the launch pad is really not an option. So developers are being slow and cautious to make sure it's rolled out at the appropriate pace. Hopefully it happens this year. When it does, I think what it means for investors is a couple things. Number one, if you look at a website like stakingrewards.com, you can see what competitor proof of stake networks have in terms of total circulating supply versus what is being staked for validation. And the numbers range between 30 and 70% of the total assets in existence. ETH2 is somewhere around 10% of all the ETH in existence currently sitting on ETH2. And so what's exciting here is if you believe that this is going to be a transition from people holding these unproductive commodities and turning them into these yield generating instruments, right? You can now get this 4.5% yield. Maybe it spikes higher when there's a lot of network usage and you're collecting some of the transaction fees on the network. A lot of people are going to want to capture that yield when they don't have this lack of liquidity for some unknown period of time. And so there's a huge incentive for those people to participate in staking. I mean, for me, why would I not want to generate, 5 to 13%? It's going to fluctuate based on a whole bunch of things. But of course, I'm going to want to stake my Ether because I'm long the asset anyway. I'm not looking to sell my Ether, next week or next month if the price spikes. This to me is a generation-like hold. I'm going to hold it for 10 years, 20 years for my kids. That is how I'm treating these networks. And so, of course, I'm going to stake it and capture that yield. So I think you're going to see a lot of institutional demand in these assets. You're going to see a lot of institutions be excited by proof of stake as a form of validation, while proof of work is still struggling to battle the narrative of energy consumption, and pension funds and regulators and government are very focused on ESG mandates. We can sit here and argue pro or con if they're right or if they're wrong, The point is that Bitcoin has that taint to it currently, that it's energy intense, and proof of stake doesn't have that. And so it's going to point a lot of dollars towards this network, plus stacking on that yield opportunity. It's really exciting. And so for Ether Capital, I mean, I would expect the value of ETH to go up if the transition doesn't, blow up on the launch pad, which is a real risk, by the way. But assuming that the transition is pulled off successfully, I think that it's very bullish for ETH and very not bullish for competing networks that are already proof of stake, because that value proposition is no longer unique to them. Now you have the most dominant network in capital formation and intellectual capital, being able to offer staking and yield generation as well. You're muted.
Sorry, thank you so much. Yeah, these are great insights again. But right now, so we have like 15 minutes left, and I would like to just get some questions from our audience. So feel free to jump in and ask questions to Brian. Yes, you can unmute yourself. Yeah.
Hi, Brian. Thanks so much for being with us today. I also started my career in production, so love that you started at Dr. Oz and made your way to Web3, as I have as well. One of my main things I'm super passionate about is onboarding women and other underrepresented people into the space. And in traditional investing, ESG investing has become such a huge topic. I know you mentioned you're involved in some policy, so I was curious how yourself and Ether Capital are looking at governance and ESG measures as you're evaluating potential investments.
So we're not as focused currently on investing in other businesses versus building out infrastructure. In terms of ESG mandates generally just surrounding the space, I think it's important to keep in mind, I mean, Bloomberg asked me this question last week. First of all, 60 or 70% of all of the crypto that exists is on a proof of stake network at this point in time. So this whole idea that the whole industry is wasting energy is kind of incorrect. Ethereum is also getting rid of proof of work and replacing it with proof of stake. And Bitcoin mining itself, there's an incentive, remember, in just market forces to co-locate their activities to some other business that gives off electricity as a byproduct of some other service that they're performing. There's also signs that some 50 to 70%, 70 probably sounds high to me, but 50% of the Bitcoin network is now using renewables as a source of energy. And that's just on the E part of that ESG. In terms of social and governance, I mean, I think it's important to keep in mind that these are the most open, permissionless, global pieces of financial infrastructure that society has ever seen. It doesn't matter where in the world you live. You can go on GitHub if you have access to an internet connection and participate and have transparency into what the infrastructure looks like. And kind of in a way, what we're seeing is, a lot of society to date has been very, they're like hierarchy structures, and crypto and the internet is a very networking, mesh network-like structure. And I think the oil and water in terms of regulation and how governments are looking at this is you're watching the fight and the abrasive surface of these two worlds coming together of, are we going to have these top-down set of rules, or are we going to have these community self-composed set of rules? In terms of bringing people into the space who are underrepresented or not present yet in the space, I think NFTs are a really interesting use case for that. You can be whoever you want to be. Again, you can be a pineapple, you can be whatever person, you could be an alien, you could be whatever you want. And one beautiful thing is when you go on Discord, you can see that people are interacting really just based on ideas, not based on, I mean, there's a bit of user handle there, but you can pick what your gender is. You can pick if you're a person, if you're a pineapple, you're an alien, or you're a pizza without pepperoni and want to be a vegetarian pizza. You can do that and participate in these communities. So that's kind of how I'm looking at how I hope the conversation pulls more people into the space, because I do think that these spaces aren't perfect yet, but I think that there's more momentum almost in crypto than in any other industry. I would love to see people have the same focus that they do on Bitcoin energy mining, understand that golf courses and lawns are abhorrent in the amount of energy that they consume. Same with Christmas lights, but people don't ever say we should turn off our Christmas lights. So when I hear people say, do you think that, these networks aren't they so wasteful? I always ask back, what you're really telling me is you don't understand the value in something like Bitcoin. But if you look at what's happening globally, right now, ask someone who lives in Ukraine who's trying to leave the country and can't get access to more than $300 out of an ATM at a time, if they think a digital bearer asset that can cross a border with 12 or 24 words stored in their head, is that valuable to them? They will say 100%. The same for people who live in Venezuela or who held Argentinian pesos that used to be 1-to-1 to the US dollar, Turkish lira in the last few years. So there's broader conversations that really need to happen around, and it's really education. So that's something that I'm very passionate about is engaging in these conversations. I don't know how much you're involved in regulatory discussions or government policy. It's really important, as much as it is like hair pulling. It's really important to help people have very measured approaches to these conversations, because it's not that their points are invalid. It just needs to be balanced out by, what is the opportunity here? We can't just in isolation make these broad statements and say, we don't like Bitcoin, we don't like Bitcoin mining, just push it out of the country. It'll just move into another jurisdiction. And we'll get left behind. The US will get left behind. Canada will get left behind. The networks won't turn off and stop. So if you're interested in any of those things, I'm happy to take this discussion offline and talk about how I can help, lend myself to it, weigh in, learn something from research that you're doing. But definitely an important area for sure right now. And I spend a lot of my time not being the CEO of Ether Capital, as being what I kind of jokingly call the dancing bear, to Bloomberg, to regulators, to government, to try and articulate different viewpoints of, what the space is up to and how we can look at it through different sides of the prism.
Thank you. Really interesting. I'm part of a DAO that's kind of exploring this, so would love to chat offline further, but thanks so much.
Cool.
Awesome. Yeah. Go ahead, Carolina.
Stepping off on the international use of cryptocurrency. Do you ever? So I think that for countries where there's a lot of problems within the country, it's really easy for crypto to be very prominent, like Ukraine, Argentina. But do you see crypto not replacing, but being a really large part of the economy in developed countries where people still trust a lot the main currency? That's my first question. And my second question is about you still trusting Ethereum so much versus this new blockchains like Solana and stuff like that, because they're more optimization. But do you think that the optimization will be so much until the move from Ethereum to another blockchain is so big that it becomes a 0 to 1, as you mentioned?
So, on your first question, I think that certainly in countries that don't have stable currencies, or there's a lack of trust in the monetary policy, and you're seeing that, by the way, in the US. You didn't call the US, one of those countries, but the reason that there's this renewed interest in crypto is that people are looking at pending inflation, or we already have inflation. And remember who makes up CPI, the Consumer Price Index. There's an incentive for CPI to be marked lower than it actually is. And so CPI can be 7% or 8%. Ask any of your friends who are looking to buy a house or rent, ask them if their rent went up, 5% or 6%, or if it's up 20%. So there's this real disparity, or there's a real delta between these numbers, and people who live in the US who have a, in quotes, stable currency are sharing those same concerns as people who are in, as I mentioned, holding Turkish lira and Argentinian pesos in Venezuela. Capital controls are a real problem. I think those countries certainly do want to look at crypto as an alternative. They're okay with the volatility. They trust it more than their governments and their central banks. It'll be adopted sooner in those areas versus a jurisdiction like the US, but you're already starting to see it. I think that there will be a real interesting conversation to be had as G20 nations start feeling their sovereignty be threatened by people fleeing, holding their dollars. And in a way, this ricochet effect of the sanctions against Russia kick off this conversation, because any other country who just watched, Russia have their assets freezed globally in other bank accounts, gold, what yachts, what doesn't matter what it is, should be looking inward and thinking that could happen to us one day if we ever change a policy of a certain kind, or we're at the wrong side of our viewpoints with the US. Maybe we also need to divest away from holding USD as our reserves. And I'm not saying that they ditch it entirely, but the fact that Bitcoin is in the room or at the table in a conversation around what a central bank should hold on their balance sheet says a lot. Doesn't mean that they're going to do it today, doesn't mean that they're going to do it by a big percentage, but it's entered the conversation. And that's really interesting. Your second question was around the optimization, or what I'm calling a non-0 to 1 for something like Solana. In general, I actually don't think Solana works. The way that it does proof of stake, I think, is technically broken, and it will not scale. And I think is also a big risk in terms of if you want something that is censorship resistant, which I think is very important to the space. That is why these assets exist. Doing something cheap and fast is not hard. We all use, well, I'm about to date myself here, but like Facebook Messenger or Instagram DMs, those are also cheap and fast to send a single message. They're much faster than Solana and they're much cheaper than Solana. This isn't about cheap and fast. This is about creating something that can't be tampered with. If you believe that, this is my definition of a blockchain, is a coordination mechanism between untrusted parties. To me, it's very dangerous to have a blockchain that only has a set number of validators and a very few number of validators that the entire network relies on. And this is why you've seen the network go down and then it very easily be able to reboot itself. Solana technically didn't go down. It has to do with the way that messages are processed on the network. But I don't think that architecture works. I do think that people don't realize yet that bridges between layer ones are big security risks. And this is also kind of true for layer 1 to layer 2s. But as many people believe that there's going to be this interoperable future, I'm not sure that that's correct. I think there will be a multi-chain future where you'll have like different blockchains with copy-paste sets of activities. But I don't know how much you're going to be moving your asset between different chains, because if something goes wrong on, let's say, Solana, I don't mean to, by the way, pick on Solana here. I'm just using that as the example. Sorry if you're a big Sol bag holder. But let's say something goes wrong on Solana, or something goes wrong on Near, and that's written in Rust as the language. In Solana, it's written in Solidity. And let's say you've got a contract on Ethereum that you have this bridge that it's a two-way bridge, and so the contracts are watching one another, and something blows up on this side, written in a different language. You now are going to need to coordinate across two different communities and languages to undo that bug. People are very underweight how real of a risk that is. Forget that the Solana wormhole hack was bailed out and everything seems to be fine. That is going to happen more and more, and I think over time, people will realize how heavy that risk is and the coordination of the communities and languages that are to undo, and it'll push people more into these ecosystems that are more aligned in terms of language and environment, like execution environment on like layer 2 and data availability being pushed down to layer 1 on Ethereum. That to me is more likely to be the future. And that people in Solana will stay inside of the Solana world for most of their activity. And maybe there's a layer 2 that emerges on Solana, rather than you're crossing all over the place. Those bridges just carry so much risk. Sorry, that was a little in the weeds.
Thank you so much.
No, thank you. We can have one more question before finishing. If anyone wants to ask a question.
Hi, Brian. Can I thank you so much for being here. I guess I'd like to take this chance to ask you more about how do you think the blockchain like network can actually solve the current capacity issue, because right now I'm working on a DeFi product, which is like a trading bot platform. We use very simple algo tradings, but right now our orders are flooding the DEX. We are building on Solana, and Solana boasts itself with like high like TPS, but still like 1,000 like 2000 TPS is not sufficient to support a lot of activities on the blockchain. And we've been wanting to explore like more about how do the networks expand, like using ZK knowledge or using other like optimistic rollups. So how do you think is the future to like break this capacity issue? Especially I'd like to know, what do you think about the future of ZK rollup? Thank you.
So super excited about ZK for sure. And I think that it's going to take a couple of years before we move to, as I was saying in that last question, Ethereum becoming data availability on layer 1 and layer 2s turning into the execution layers. And then through things like sharding and optimism and ZK, that will allow higher throughput. Another thing that we haven't really seen yet is a blending of these worlds of, and Solana kind of challenges this idea of, you have things that are centralized in TradFi on one side of the barbell, and then you've got decentralized, Bitcoin and Ethereum on this end, and then people, moan and wail if there's anything that tries to go in the middle. Well, it's not decentralized. It's like, maybe it's not so binary. And by the way, no one has the answers to these things. Like I'm just presenting how I view things, but it doesn't mean that I'm right. What Solana did that's kind of interesting is to say, maybe there's a spectrum of decentralization, that we don't have to be as centralized as Facebook or AWS, or as decentralized as Ethereum. Maybe there's some optimization, some way to be in the middle of that barbell to try and have faster transactions. And maybe there's some trade-offs that are okay. I'm a little bit less in that camp, and I'm more in the, you have to respect decentralization first and then figure out how to scale, rather than just throw a lot of those ideals away. There's something that if anyone's not familiar with, called the graph of the efficient frontier. I don't know if you guys studied that in your MBAs. It's kind of interesting to me to see. There's another tab on top of your 0 to 1 book purchasing. The graph of the efficient frontier shows basically it's the benchmark portfolio against low risk, low return, high risk, high return. And you plot those 2 points on the graph. And what you're trying to do is optimize for low risk as low as the lowest risk, or lower risk than the low risk asset, but higher return than the low risk plot on the graph. And when you do this, you actually get this kind of wave. You get this curve if you graph this out. And I looked at this not that long ago after a few drinks. And I thought to myself, like, it's kind of interesting to apply crypto to the graph of the efficient frontier. And there's people who say it works or it doesn't, but whatever. But it's an interesting idea to think about crypto against this graph of the efficient frontier, where Bitcoin sits in that bottom position. Some of you, I'm sure, pulled this up by now. But Bitcoin sits in that bottom position of low risk, low return. Solana has gone high risk, high return. And Bitcoin has said, you need full decentralization to do internet money. And Solana has said, you need to get rid of a fair amount of decentralization if you want higher throughput and maximum flexibility. And one of the reasons why I'm so pro Ethereum is because I feel like it actually is that middle point on that graph. It's that thing that understands the trade-offs of these two worlds and is trying to say, you need to ensure censorship resistance is maintained in whatever protocol design you have, whatever interaction you have, but you can't go so extreme that you can be censored and you've given up the flexibility of a blockchain like Bitcoin has. Like Bitcoin, sorry, I said that a little bit weird. Bitcoin is not flexible enough to be higher than that low risk, low return position. Solana does understand you need more flexibility, but it threw away the decentralization. And so Ethereum to me is kind of that thing at the front. I do think it's still going to take years to do all the things you're talking about. ZK, I mean, I don't know if you've played around with Aztec yet, but okay, I'm still good here. So, ZK definitely will help. Optimism is a really interesting emerging layer 2 on Ethereum, and sharding, but these things are going to take years. And maybe what we see is an environment that it's a blend of centralized services or off-chain interactions that push hashes back to some type of main chain, which may not be exactly what you're trying to build, because it sounds like you're doing like DEX aggregation kind of stuff. Like, is that more or less what you're working on?
Yeah, on DEX, yeah.
Yeah, it's really tough because you could end up having like, 1,300 transactions in the process of or a single day. And there's all these like transaction fees. You're like, wait, what? I need higher throughput, or I'm just like going to clog up the network. And that's one of the arguments against, you can't have a network that is free. It's just not possible, because if you have free, you're going to have a bunch of BS spammy transactions, which is why you have transaction fees literally in the first place, and why Bitcoin has this max cap of data size per block. Because if you made it unlimited, you're just going to have people spamming the network. So there had to be some mechanisms put in to cap the data, to force transaction fees to go up. And you could think of this like a good way to describe Ethereum layer 1 and layer 2. And I don't know, is everyone on this call, by the way, as in the weeds as you are? If so, that's pretty impressive. I just dragged my name. Carolina shaking her head no. But the way I kind of think about an analogy on layer 1 versus layer 2 is, in layer 1 Ethereum, you could think of that as the Supreme Court. And all of the activity is lining up at the Supreme Court. I'm going to take out $1 million mortgage for my condo. I'm looking for, look, Jessica, who haven't I picked on, who's on my screen? Jessica is standing behind me with her $5 parking ticket. And we're both asking the EVM, the Ethereum virtual machine, to process our transactions. Mine is what I call a high density, high value transaction. Jessica's is low density, low value. And she's standing, with me in line at the Supreme Court saying, validate this transaction. But the truth is that we both don't really need the security or the final stamp of the Supreme Court. I want that on my mortgage. I can be at the base layer. It's more appropriate for Jessica to move into a regional court system, like a layer 2 that has some security trade-offs, or something like Solana that has some security trade-offs, because it's just a $5 ticket. She doesn't need to pay $10 to have the finality of that transaction recorded in Ethereum's database. It's going to be totally fine on Ethereum layer 2. And so I think of layer 1, layer 2 as this Supreme Court, judicial, regional court system like relationship, where the hashes or an overall set of the state will be pushed down from Ethereum layer 2 down to Ethereum layer 1 every block, every 10 blocks, every hour, whatever it's going to be. And that points more towards what I was saying before, that Ethereum layer 1 is data availability. It's the state of your account, but the execution layer, the actual tapping your Visa card and transactions around the city, that happens at Ethereum layer 2. So this stuff is going to take time. The question for you now is going to be, where can your aggregation services live? And you're just going to probably bounce between different networks or different layers that offer the cheapest amount of bandwidth, basically, to continue on. But you're going to get stuck where the capital formation and the liquidity is going to be on Solana, and there's too much slippage to keep going between Solana and some layer 2 and crossing the wormhole bridge every time you want to do that. And as I said, you're also taking on the security risk of those bridges. So unfortunately, my final answer here is, I don't have an answer. It's deeply complex, but it's interesting that you're thinking about it and you're seeing these issues. And I'd also encourage you to think about, just as a thought experiment, while you're looking at different solutions, think about the risks of each of those things you're doing, not just can I maximize the price in the trade? Am I also putting into that algo, is there also some risk weighting of what I had to do to get this price? I had to turn up the risk dial of bridges, different layers, different DEXs, different front ends that maybe haven't been vetted the same way that the DEXs that you're using have been. I'm not an expert in Solana by any means, but there's higher trust in the Uniswap code than there is in the SushiSwap code versus the Kimchi Swap code. Some of you might have been around for the Kimchi Swap fork of SushiSwap, which was a fun time. I, by the way, don't have to be anywhere for another 10 minutes. So if you want to keep going, we can keep going. If you want to end it now, very happy to do that. Up to you guys.
Thank you, Brian. So we already exceeded our time. The thing is that let me just, before wrapping it up, we are a bunch of people who are trying to pivot to Web3 right now, and we would like to get your recruiting tips. And if you would like to drop any kind of contact info so that people can reach out to you, or Ether Capital, offline?
Yeah, I mean, I don't have I don't really have any specific tips. I think you guys are in like the best position of anyone in the space because you're young enough and hopefully most of you computer savvy enough to be comfortable to get up to speed on all the lingo, the lexicon, and what's happening, versus the people in my company who are, 40 or 50 or 60. This is complete insanity to them. And they also have a disadvantage over you guys, which is that their minds have already been kind of boxed into a viewpoint of the world of how things should be built and what infrastructure should look like. And people who are younger, who haven't worked in the TradFi system, aren't as jaded yet or aren't as definitive in what those systems could be designed to look like or what they should look like. And that leaves, I think, a canvas much broader for you guys than they have. Get on Twitter ASAP. Follow a whole bunch of people. Ask questions. Ignore all the jerks who are on there. Be the pineapple or the vegan pizza, whatever you want to be on Twitter. That is absolutely important in this space. It is the town square for crypto. It's where all the ideas are being debated. It really is where all the alpha is. The alpha is not living on Reddit right now. Discord is a little bit too noisy, but if you could find the right community, maybe it's there. So that would be my advice. And reach out to as many people in the industry. Stay in close contact with the people who are in the verticals that you think are interesting. Go reach out for people, take them out for coffee. Just go meet with everyone. I think this space is really a us versus the rest of the world kind of space, where as much as everyone's kind of like hating on each other, there's still this vibe of we want more people in crypto. We want more people working on all of these problems that are very hard, and building all of that infrastructure, the exchanges, the insurance products, the access points, the wallets, the DeFi protocols, the custodians, like everything needs to get built. So we just need more people in the space. So everyone should be hopefully very welcoming and encouraging to you guys. Feel free to reach out to me. My email I threw into the chat box. You can find me on Twitter. You can DM me there. You can find me on LinkedIn. I live on the internet. I'm always connected to a device. I have anxiety if I spend more than 5 minutes a day not connected to a device. If you have a specific person you're trying to get in touch with or a company, ask me. I probably know someone there. I can make an introduction. I'm very happy to do so. I'm also always in and out of New York City. I'm there full-time basically as of September. So I'm around the city, happy to help you guys any way that I can. True story.
Yeah, thank you so much, Brian. Thank you for all joining to the session. So it was amazing event with you. Thank you for your time. So yeah, hope to see you again for another event maybe.
Thanks, everyone. I'm in New York. I don't know if you guys are kicking around, but I'm in New York basically end of May all through June at various crypto events and things, and doing some stuff with Bloomberg. So hope to see you all, at those events or in the industry soon, or email me with questions or tell me I'm dead wrong on something and here's why, and paste a link. So look forward to continuing the discussion, and bye everyone. Have a good rest of the night.
Goodbye.
Cheers, everyone.
Take care.
Thank you so much.